Good afternoon, ladies and gentlemen. I am Dovin, moderator for this conference. Welcome to the conference call of Orient Technologies Limited, arranged by Concept Investor Relations to discuss its Q3 and 9-month FY26 results. We have with us today Mr. Ajay Sawant, Chairman and Managing Director, Mr. Srihari Bhatt, Chief Executive Officer, and Mr. Gaurav Modi, Chief Financial Officer. At this moment, all participants are in listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your telephone keypad. Please note, this conference is being recorded. I would now like to hand over the floor to Mr. Ajay Sawant. Thank you, and over to you, sir.
Thank you, Domin. Good evening, ladies and gentlemen. Thank you for joining Orient Technologies Limited's Q3 and 9-month FY26 earnings call. We truly appreciate your time and continued interest in our company. Firstly, I would like to give you some background about the company, then move on to the highlight of the financial and operational aspect of Q3 and 9 months of FY26, post which we shall proceed to the question and answer session, wherein my colleagues shall do our best to answer your queries. Q3 was a challenging quarter due to global semiconductor shortages and supply chain disruptions, which impacted hardware availability and led to pricing pressures. Despite these headwinds, we executed committed orders to maintain strong customer relationships, though this resulted in temporary margin pressure. On the services side, the loss of a large telecom client impacted revenue and margins during the quarter. Looking ahead, while supply side challenges may continue in the near term, our focus remains on managed services, DaaS, cybersecurity, and unified infrastructure management. We are confident this strategy will support recovery and long-term sustainable growth. Now coming to the financials on a standalone basis, in Q3 FY26, revenue from operations stood at rupees 200.10 crores compared to rupees 206.85 crores of Q3 2024 with respect to Q3 of FY25, reflecting a 4.17% year-on-year decline. EBITDA for the quarter was rupees 3.02 crores. The company reported a loss before exceptional items and tax of rupees 1.41 crores and a net loss of 14.96 crores during the quarter. For the 9 months ended FY26, revenue grew by 18.10% year-on-year to rupees 683.60 crores compared to 578.85 crores in 9 months FY25. EBITDA stood at rupees 42.31 crores with profit before exceptional items and tax of rupees 31.90 crores and profit after tax of rupees 9.24 crores, translating to an EPS of rupees 2.02. In terms of Q3 FY26 segment mix, telecommunication contributed 2.47%, BFSI 27.39%, government and PSU 19.19%, ITS 19.17%, and mid-market and others contributed to 31.78%, which includes sectors such as healthcare, manufacturing, infrastructure, real estate, logistics, and education. During the quarter, Orient Technologies secured multiple new contracts across government, pharma, utilities, and digital commerce, strengthening its services-led growth. A key win was a 3-year managed services contract from Digital India Corporation worth around rupees 15 crores to manage platforms such as Umang and DigiLocker, reinforcing its presence in mission-critical government projects. The company also secured a rupees 2.65 crore order from a leading pharma client for data center storage and infrastructure upgrade, and a similar size contract from a power utility for data center expansion and disaster recovery implementation. In the quick commerce, Orient won a rupees 2.8 crore rupees of a SD-WAN contract along with an additional rupees 6 crore order for full network deployment, including firewall and Wi-Fi solution. Additionally, the company inaugurated a new service delivery center in Navi Mumbai, Turbe, to enhance 24/7 monitoring, cybersecurity, cloud, and managed services capabilities. With this, I come to the conclusion of my opening remarks and open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Our first question comes from the line of Mahesh Kumar from MUM Invest Limited. Please go ahead.
Hello, sir. Thank you for the opportunity given to me to ask the question. Am I audible properly?
Yeah, Mahesh, go ahead. I can hear you.
So just wanted to ask, like Q3 saw a very sharp decline of EBITDA to 3.95 crores, and PBT turning negative. So could you help us understand like how much of this margin pressure was purely supply chain driven versus the impact of hyperscale client loss, and importantly, when should we expect this margin to normalize?
Okay, so Mahesh, there are two components to this. One of the component which is because of the supply chain, the rate contract which we have signed with the customers has the we have to execute those contracts at the same price, keeping in mind that our long-term association with the customers, though the OEM has increased the prices, we have to execute the contracts at the same price which we have signed up earlier. And this is there till 31st of March. Means even Q4 we have that obligation and we will be executing certain deals which are of that size. Of course, loss of a hyperscale customer which is there, which is from a telecom segment, we have loss, but that's a momentarily one-time loss which we have incurred in Q3.
Okay. And so the Digital India Corporation contract with 15 crores, 15 plus crores average quarterly billing appears meaningful. Could you elaborate on the margin profile of this engagement and whether this strengthens the annuity and recurring revenue mix going forward?
Fantastic. So Mahesh, of course, it's a annuity-based contract, 15 crore repeated every quarter. This is happening. So yearly, this may contribute us 60 crore rupees of a revenue. This is ARR, and this contract is there for minimum 3 years, extended further. So this is an annuity base, number one, and the margin currently is fairly good. And it's basically on the hyperscaler, so there is no component dependency on this. Okay, so we'll continue to get margins on this from our hyperscaler vendor.
Okay. And lastly, sir, given the continued supply side headwinds into Q4, how should we think about revenue growth and EBITDA trajectory for FY27? And are we positioning this for recovery and margin expansion next year?
Yeah, so I'm very hopeful about this pressure of margin will not be there in the coming year. The reason being, by that time, most of the customers will start accepting the new prices. And we'll get used to it. And my firm contracts which I have signed, which is till the year end, will get over as well.
Okay, sir. Okay, that's it from my side, sir. Thank you so much for answering my question. Thank you.
Thank you. Ladies and gentlemen, you are requested to please restrict yourselves to 2 questions only. You may rejoin the queue if you have follow-up questions. Our next question comes from the line of Shashikant from Brighter Mind Equity Advisor Private Limited. Please go ahead.
Hi, sir. Good afternoon. Thank you for giving me the opportunity. My question is about the big pipeline that we are having, in terms of order book for the next year, FY27.
Okay. So, Shashikant, thanks for asking this. The current order book for a Q4 is of around 200 crore rupees, which includes our infrastructure deployment projects as well as cloud and managed services contracts. While project revenue remains significant currently, we expect annuity-style managed services share to increase going forward as knock and sock, revenue will scale.
Okay. So, I mean, are we trying to, bid more of government projects in coming years, or you're looking more on the private side?
So we are not only dependent only on the government and PSUs, but we are also working well with the enterprise and the mid-market segment. Our actual sweet spot, if you see in our segment mix, is in the mid-market segment, which is contributing to more than 31.78%, as I mentioned in my opening remarks.
Okay. So currently, how you are seeing that there are lots of hyperscalers coming to India. So, what is, our outlook on capturing new logos from these players in coming years?
So from a GTM perspective, we are working on the various front. New hyperscalers or the people who are trying to build hyperscalers in India is one of the focus, along with GCC, gift cities, people coming into the gift cities, and the GCC are the next focus for us to increase our, business.
Okay. So on hardware front, so what is the current status of the semiconductor shortage currently?
The semiconductor challenge will be throughout 2027. Okay, means the entire FY27 there will be a challenge.
Okay. Thank you, sir. That's all from my side. Thank you.
Thank you. Our next question comes from the line of Vikas Jain, an individual investor. Please go ahead.
Hi, sir. This is Vikas. So, sir, my question is regarding the 14.96 crore loss which you mentioned. So, in future, are we expecting some recovery from this particular client?
From the same customer, probably we will not able to recover anything because he has moved lock, stock, barrel from us to directly on the hyperscaler vendor. So very honestly, let me tell you, this loss I will not able to recover it from this customer. But we are trying to recover this loss from the hyperscaler itself. But today I will not able to promise you anything until unless I have something in return from the hyperscaler vendor. And once we get it, we can able to vouch for it.
And so the second question is regarding last quarter call you mentioned that you are working in a foreign bank. And so could you please put some light on that?
Foreign?
Foreign bank.
Yeah. So there is already the work is in progress there. We already got certain orders from that bank. Okay, we are preparing a lot of reporting for them in terms of digital transformation. So good amount of business we have started doing with this bank.
Okay, sir. Thank you so much, sir. Thank you.
Thank you. The next question comes from the line of Prem, an individual investor. Please go ahead.
Hello. Am I audible?
Yeah, Prem, you can go ahead.
Yeah. So thank you for the opportunity. So my first question is, what is the current net debt position and debt to equity ratio as of Q3 FY26?
Can you just repeat your question?
Yeah. What is the current net debt position and debt to equity ratio as of this quarter?
Bad debt position.
Net debt
Are you
position.
asking pardon me?
Debt position, yeah.
Debt position.
Hello.
Okay.
Yes.
So currently our debt is at 52.50 CR.
Okay.
Okay. What else you ask?
Yeah. And okay. And what is your debt to equity ratio?
Debt to equity. Hello.
Yes.
Yeah. You want debt to equity ratio, right?
Yes.
Yeah. So if you calculate my debt is around 52.5, and if you calculate my equity currently, is around 340 CR.
Okay. And my second question is, sir, how competitive is the mid-market IT infrastructure space currently? And are you witnessing any pricing pressure?
So yes, so the pricing has gone up definitely for all the components, and that's why all the OEMs has increased the prices. So that's very common in our industry. As far as our margins are concerned, just to keep a relationship with the customer, somehow we are trying to get their budgets, in accordance with the new price structure, which nobody has probably thought while budgeting the year. The pressure is definitely there. Margin pressures are definitely there.
Okay. And sir, one last question. What is the current revenue share from cloud, data center, and managed services business?
So you can take cloud is around 250 plus crores.
Okay.
Managed services, including infrastructure managed services, is around 100 plus.
Okay. Okay, that's it from my side. Thank you.
Thank you. Our next question comes from the line of Akash Agarwal from PNB Bank. Please go ahead.
Hello.
Hi, Akash.
Yeah, hi. Am I audible, sir?
Yeah, Akash, go ahead.
Yeah, I just wanted to ask that in the market currently there's AI disruption going on. So how is the company will cope up with this AI disruption, and will it affect the company in future?
I would prefer this is boon for all of us. I will not call it as a disruption as such. This is actually good for us. But that's where the business opportunities will be there, in terms of infrastructure, in terms of managed services, in terms of opportunities, in terms of cybersecurity. I see this as a big opportunity, and that is why we are all getting our skilled for. This is where we are trying to take this opportunity with both hands and grab this and take this organization to the next level, because such disruptions actually help Orient to grow for last 3 decades. Just to tell you, when we started this organization way back in 1997, the first disruption we saw was a Y2K. Everybody, was worried about Y2K. What will happen to all their applications? And IT industry grew because of the Y2K. Then comes the DR. Okay, disaster recovery. So, all those buzzwords, today I feel AI is another buzzword. And that creates an opportunity for IT companies like Orient. And we capitalize onto it in terms of, infrastructure sale or a managed services sale, cybersecurity sale, and we are all prepared for it.
Okay, sir. Thank you.
Thank you. Our next question comes from the line of Chinmay Shah, an individual investor. Please go ahead.
Thanks for the opportunity. Am I audible?
Yeah, Chinmay, go ahead.
Yeah. Can you give some color on what is your current SOC and NOC center status? I mean, in terms of revenue and what margin we are expecting?
Okay. So let me share the good news today is that our NOC and SOC operations at Turbe is working fully in operational. So in the last quarter, we started our business from the SOC, but from a quantum of revenue perspective, we expect utilization and ramp up over next 24 to 36 months as the enterprise contracts and the managed services migrations complete and the new SOC deals come on board. The ramp-up profiles aligns with our typical managed service contract cycles. So I expect that 100% utilization of that NOC and SOC should happen in next couple of years.
Okay. And sir, can you just, currently the government has in recent budget have declared good amount for data center, right? So what's your view on that? How it is, applicable or, in revenue generation or finding a good customer in that sense?
Yeah. So government is actually, doing lot of investment or allowing people to invest to build their data centers in India, because India is considered to be IT hub, but that's mainly because of the application development and the services perspective. We are not a manufacturing hub as such. So that is where India is going to invest in the data center business, and that's where big guys are building a data center, and organizations like us who will be managing those data centers in terms of managed services, cyber security, NOC and SOC.
Okay. And sir, one last question, if you may allow. Sir, can we consider Dynacom system as our closest competitor?
They are good friend of us. Naturally, I don't consider them as a competitor as such. Okay, they are doing their business. Their business profile is slightly different than our business profile. Okay, so I will not like to say that they are a competitor to us.
Okay, thanks. I will join back with you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and one. Our next question comes from the line of Kupa Kamdar, for an individual investor. Please go ahead.
Hello, am I audible?
Yes, ma'am.
Good evening, and thanks for the opportunity. So basically, I just wanted to understand, in terms of the semiconductor shortages. So, I mean, do we expect this supply chain challenge to continue?
Ma'am, with a heavy heart, I am saying this will continue throughout the year.
All right. So, I mean, can you please explain the impact it would have, going forward in our operations?
Okay, so I'll tell you the real scenario. What has happened is there's a big boom coming on and around AI. Everybody wants to do something in AI. Okay, whether it's a generative AI or whether it's a agentic AI, they want to do something in AI. Now, AI will be operated only on the GPUs, and that's where the NVIDIA plays a very important role. There's so much of, infrastructure pull on and around this NVIDIA has happened, and those guys are taking lots of RAMs, disks, and other components, where the semiconductor industry is facing the challenge. If they consume so much, as you know, AI requires a huge infrastructure, and that's where the shortage has come, and that has increased the prices. And this, semiconductor industry, you can't start, overnight. You need to have a minimum 8 to 10 months of time to build your own manufacturing setup of these RAMs or disk or anything. So if they have to ramp up their production, they need to give at least 8 to 10 months of window.
All right. So basically, it would at least take 1 year for things to normalize in terms of supply issues, right?
Yeah.
Okay, sir. So apart from that, also just wanted to understand, our roadmap regarding the geographic expansion. So, I mean, as of now, we are majorly focused on domestic markets. So any plans on expanding, in US market as well?
Absolutely no at present, because from an infrastructure space, this is not the right time to go anywhere outside India. There's a huge opportunity in India. Okay, and first we need to capitalize here, then go to the developed countries.
Okay, all right. That's it from my side, sir. Thank you so much.
Thank you, ma'am.
Thank you. Our next question is a follow-up from Chinmay Shah, an individual investor. Please go ahead.
Thanks again for the opportunity. Sir, just one query regarding our client loss. Sir, generally, we don't have any advances or something like that with our customer, or it can happen again also?
So Chinmay, this is a hyperscaler customer, as you say, so they are all pay per use.
Okay. Okay.
So you can't take advance on that.
Oh, okay. Got it. So got it. Thanks.
So
And
it's a
sir, one more
consumption.
thing. Yeah. Okay. Got it, sir. And sir, as I see our last 7-8 quarters, we are maintaining operating margin of around between 8 to 10%. So should we consider from next quarter onwards it would be the same?
So we don't predict any margin for a future business. So very honestly, I'm not able to comment on that.
No, I get it, sir. But this time only we have came to only operating margin of 1% due to that loss, and I think maybe 4 crore is due to labor loss, right? But in future,
Yeah, correct.
maybe.
One of the factor was labor law.
Okay.
Another factor was because of this customer.
Okay. Fine, sir. Thanks, sir.
But
Thank
that's
you.
all exceptional, Chinmay. So don't
Yeah,
worry
I
on
know.
that front.
Yeah.
So,
Okay. Okay. Thanks, sir. Thanks.
Thank you. As there are no further questions from participants, I now hand the conference over to Mr. Ajay Sawant for closing comments. Over to you, sir.
So thank you, ladies and gentlemen, for attending this Q3 and 9 months of FY26 call. And thank you for taking time from your busy schedule. We assure you of the company's robust financial performance and fundamentals. Have a good day. Over to you, Dobbin.
Thank you. On behalf of Orient Technologies Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.